All right. Hello, everybody. I think we are live, I believe. Whether we're going to see anyway in the replay, if we are live. Welcome, everybody, to this week's edition of Selfwealth Live. We are live because we've got someone chatting to us. So thanks, Sharks. Anyone else that's there, please just give us a hello and thumbs up that you can hear us and see us. There's some changing circumstances. Hey, Jace, how you going?
Hey, Rog, I'm good. I'm good. Great to be back after our week's break and last show of the year. So that's all pretty exciting.
Yeah, last show of the year, which is exciting. Well, it's exciting because we're going to have a bit of a break and hopefully have a good holiday season. Everyone can have a good holiday season as well. As for last week, once again, I'll extend my apologies. It was a last minute thing in my family, which made us cancel, and there wasn't even enough time to send an email about it all. Right, so apologies to anyone who may have been waiting for this show last week. Unfortunately, these things happen, so hopefully you can accept that. And the exciting part about this is that we are continuing next year. All right. So this is exciting for me because I do love doing this show with you, Jace. I do love having a chat. I do love seeing the comments that people give us and the compliments and the questions and all that. And it's just great to have this community that we've sort of created over the last year and a bit. Continue into 2025, right? So this will be our last show this week, and then we'll be back on the week of the 13th, January the 13th, which would be the 14th, generally on a Tuesday. But January the 13th, that week we'll be back. All right, and you'll get an email from us at Selfwealth. I'm sure you're going to get an email if you're a motion trader. You'll get an email from Jace when we'll be back on these shows as well. All right, I think that's enough for the formalities. Obviously, we are streaming through YouTube, so if you've got any final comments for the year or questions or whatever it is, then please do give us a like, give us a subscribe, and then make sure you put those comments in onto YouTube, as we'll be sure to respond if there's any questions in there as well. Jace, as for the markets, you are good. The markets have had a bit of a pullback. Let's get into it. Obviously, we're going to do our 3 market analysis to start off with, followed by any questions from the viewers, and then any tickers that we may have. Let's start off with that Aussie market. How are we looking this week with the Aussie market?
And just before we jump to that, just a reminder that it's all general commentary today, no personal advice. And I'll just quickly throw up our disclaimer, Rog, that we put up each week.
We've got to put that up, of course.
We're working on it. One of us will remember.
It's good teamwork.
And here we go. So, and the other thing is, I'm not part of Selfwealth. I'm part of Motion Trader. You'll see my details in the top section, licensing, all those important bits of information. And below there is the Selfwealth disclaimer. So again, general commentary only. Now, having done that, Rog, we'll jump over to the charts. So let me just navigate myself over here. So that's China. We'll get to that in a minute. So this is the ASX 200. And so the ASX 200 started the month at an all-time high. And now as we've gone through the last couple of weeks, getting down to the low this morning, it was down about 3.6% from that high and starting to approach the 100-day moving average. So on the chart, I've got the 50-day and the 100-day moving average. So is this pullback becoming a concern? And like, what are the chances that it turns into something bigger? Well, I think it's interesting to ask the question, and that question being, what makes this pullback different from the ones we saw in October and what we saw in August, and for that matter, what we saw back earlier in the year in March, February, January? And so what makes that current decline different? And I think, well, nothing really makes it that different to what we've seen previously. They all follow the same general pattern where the market rallies and then pull backs. That's the normal course of action in a rising trend. And all these pullbacks have occurred from either at or near all-time highs, just as we're seeing now. So the tendency for people is often when we see these pullbacks is to start worrying about whether the top is in. Now, this was the case back in December. Is the top in? In February, is the top in? And so forth. We can just go through these. It was the same game gets played out each time. The market peaks, pull back. Is the top in? And more often than not, the top isn't in. The market finds support, comes back to the moving averages often, and then rallies. At some point, of course, one of these highs will be a lasting peak, and there'll be a larger and longer decline. But we can only tell that in hindsight. I think when we're in the heat of the battle, I think the default position should be to give the benefit of the doubt to the prevailing trend. And for all of this year, the prevailing trend has been up. So if you've been giving that trend the benefit of the doubt through these pullbacks that we've periodically seen, you would have been able to stay with that trend, and hopefully you've done well. But if each time it pulled back, you thought, oh, well, this is it, it's all over, you'd be constantly jumping in and out of the market, and it really gets quite difficult to make money when you're doing that. I think there's the important point here is that the market typically just doesn't reach an all-time high, as we are now. Typically doesn't reach an all-time high and then accelerate lower. There's often a topping process involved. I'll show you what I mean. I'll just give you an example from. So we'll go back to the most recent significant peak, and that was back over here in 2021, in August 2021, and the ASX 200. It spent about 8 months building a topping formation. So it didn't hit the all-time high and then collapse like it did over here in COVID, but that's a rarity. That's like you just don't see that in most cycles. Even the infamous 1987 stock market crash didn't do that. So let's put that one to the side. Your more normal topping process takes some time for the market to build a top and then turn lower. Now, this wasn't an easy period to navigate because we did have some periods below the moving average which didn't follow through. The market rallied again, but then ultimately got to the point where the market did come back, consolidated below the moving averages. The moving averages turned down. This is a point of vulnerability. This is where a bearish trend can develop from. But as I say, it didn't happen in 1 week. It's a topping process. This example from 21, it took 8 months to play out. So when you come back to the current period, well, we can never know in advance what the future price action is going to look like. But there's a reason. I think there's more than a reasonable chance that if a top were forming, which I don't think it is, my default position is stay with the trend, give the trend the benefit of the doubt. But if a topping process was underway, it probably takes time. It's not something which unfolds usually in a rapid way. So if we see the structure changing and we see prices make their way below the moving averages, we see the moving averages start to turn over, like we did back over here in 21. Moving averages start to roll over. That's when, and price gets down below the moving averages, that's when we start to think, look, maybe now's the time to start reducing exposure, being less active with buying, being very on top of exit levels for stocks in the portfolio. But that's not the situation we have at the moment. That's when, it's not so much if, but it's when we start seeing that structural change. But that hasn't happened yet. At this stage, I think the odds continue to favour that this is a routine pullback to rising moving averages, just like we've seen many times this year and many times in previous bullish phases. As I say, if that structure chart starts to change, then we can consider bearish possibilities. But for now, we've got those rising moving averages. That remains a bullish structure, and I think we should be positioned accordingly. So that being long stocks. Quick look over at the equal weight. So the S&P 200 on an equal weight basis, which is always interesting because it removes that dominance of the big market cap heavy stocks like BHP and CBA because it ranks everything equally. Coming over to this, again, we've got the prices coming back to those moving averages. And we can see a range developing. You can see this range. Actually, I just draw that in. You can see the market starting to move sideways within a range. This is often works as a holding pattern. Market moves within a range, stabilizes, and then from there it has potential to lift off and re-engage with the upward trend. So it could be a case of prices consolidating between the recent high and the recent low for several weeks before then being able to re-engage the upward trend. An important support to keep an eye on just comes in here. So you can see these. So I've got this previous range still marked in on the chart. But you can see these highs from previous from earlier in the year, and you can see the recent lows that we have. So picking up some recent lows. So this level through here, which is around 1,930, I think that's going to be an important support. Would like to see the market hold above there, the ASX 200 equal weight hold above this support, which also coincides with roughly around where the moving averages are. There are always going to be pauses along the way in rising trends. I think the odds favour this is another one of those pauses, another consolidation in an ongoing bull market. But as always, I'm using wide trailing stops, and I want to be able to try and see off these periods. But if they do turn into something else, I do have an exit strategy, and that's where if the topping process plays out and prices come down, I've got that exit strategy to get myself out, protect capital, and so it's my way of playing all scenarios, staying in for as long as I can, but I've got that pathway out when need be.
Yeah, beautiful. I love the way that you've just provided context there with, those two scenarios of COVID and then just the previous consolidation. Providing that context just gives you that same, the view of what could potentially happen now, and then obviously showing this picture here, support. Let's hope that it does what you say, but you never know what can happen, obviously, and that's what you got your defensive there. What about the US markets then, Jace?
Yeah, so S&P 500, and this has been a fairly quiet week. Like, not much has been happening really for the last week and a half. All-time high on Friday a week and a half ago, and since then it's really been this tight compression just below the highs. And I think the most important feature on this chart remains bullish, and that is that we have these moving averages trending higher. The 50-day, the 100-day. They're both trending higher, prices above the moving averages. So whilst that remains the case, I think the underlying trend remains up. It's interesting though to note what's happening below the surface. So we just take an instant glance of this, and yes, that looks like that is bullish price action. But it's interesting to see what's going on below the surface. And again, I'm going to go over to an equal weight. So this is the S&P 500, which of course is market cap based. So it's predominantly driven by the likes of Apple and Microsoft, and those big market cap stocks. When you go over to the equal weight, so this is the S&P 500 equal weight. It's actually an ETF. And what you see, the price action is quite different over the last couple of weeks. It's actually been pulling back towards the moving averages. Similar stories playing out in the Dow when you look at that. So I think this pullback in itself at this point is not a great concern. We spoke about the ASX 200 pulling back. I think pullbacks are a regular and healthy part of bull market. So that's all okay. So far, the S&P 500, so just go back to the S&P 500 again, S&P 500 has been resilient to this pullback we're getting in the equal weight. But I think with a broad section of stocks pulling back, I think we should be prepared for the possibility that maybe there is some consolidation coming for the S&P 500. It looks like it's really being held up by those dominant tech stocks at this point in time, but the average S&P 500 stock is not holding up. It's pulling back. It's consolidating. I think the equal weight's a really good way to get a feel for the broader market. So we often just go to the S&P 500 by default, but it's also good to come along and have a look what the equal weight is doing, because it does remove that influence of a handful big tech stocks. I'm not planning on jumping off this trend in stocks at this point. As I said earlier, the underlying trend's still up, rising moving averages. Prices come back to the 50-day, but look, it's come back to the 50-day many times over the last year, and that's part and parcel with rising trends. You get those pullbacks. There isn't a topping process, or there isn't a topping structure in place at this time. So I think we just need to continue focusing on what those moving averages are doing, where the price is in relation to the averages, and until there's sign of a reversal going on, it's stay with that trend. But don't be surprised if we do get some consolidation, because that is a general weakening of, or at least a general pause in the trend of a lot of stocks within the S&P 500.
Okay. I'm assuming similar thing in the Hong Kong market.
Well, Hong Kong's been doing its own thing really with China, and so a couple of weeks ago we were talking about. We said there was a need for a strong rally back towards 2,800 to keep the bullish potential alive, and that's exactly what we've had. We've had that we had a surge of about a week and a half ago. This was more talk of stimulus out of China. We got that strong reaction off the 100-day moving average. What that does, it breaks that sell cycle that had been in place from November high. There's a sell cycle in place. Prices were continuing to push lower on most days, and that sell cycle has now been broken with that strong upward reaction. And I think it gives a bullish case another chance to gain a foothold and gain traction. The attention now, I think, shifts to, can the market hold on to most of these gains? So far, it's been a fairly quick give back with prices coming back to the 50-day moving average. We really need to see the Hang Seng stabilise around these moving averages. I think this is still one to watch. I don't think it's one to act on just yet. I'd like to see this sequence of lower highs broken to really start to say, well, look, looks like this is really now starting to turn around. At the moment, we have the potential of a turning structure, but maybe there's more work, maybe there's more chop, there's more backing and filling, and then a push higher, maybe as we go into January or February. But I don't think it's quite there yet. I'm happy just to continue to keep an eye on this, but I think it does have a bullish bias to it, but not enough a bias for me to get too excited just yet. And the same goes over in China. This could all be part of a big basing structure. It's encouraging. So I've got this really strong rally off the September low, followed by a pullback and a market which is trading sideways. So that's an encouraging structure. It's also like traded sideways into the moving averages. So it's certainly got the potential for this to be a market that we want to be involved with. What it's done here is that, again, we've had that reaction off the 100-day moving average. Again, it's quickly come back. Really needs to start holding its ground again. And what I'd like to see is the market start to build higher without these quick pullbacks. Like each time it gets up a bit of steam, we have a quick pullback. So yeah, ideally we start to see some that buying the dip start to push prices up. We get a series of rising lows. So we get a series of rising lows followed by a breakout above these previous peaks, and then I think we could say this market looks like it's starting to move upwards. Not in a hurry to do much just at the moment. Happy to just watch and wait, but yeah, it could be an area of real interest for next year.
All right, well, let's hope that happens as well, and we become a bit more bullish on those Hong Kong Chinese market. We haven't had a good run this year, I think, with those two markets, right? So it's every time we've looked at it, it's just not been any much to look at there, right? So let's see what happens next year. All right, let's get on to some no general questions at the moment. Thanks for, as always, Jennifer, and thanks for everyone for their feedback. I will obviously wish you another Merry Christmas, but yes, happy holidays for everyone when we get to that. Let's have a look at the first ticker then. JIN, please. Gin. JIN, there's nothing there under Gin.
Yeah, I don't know. I don't know which country we're looking at. There's a few J. Oh, is it J or G?
J.
Yeah, you see, when you said gin, I started thinking, yeah, gin with a G, but of course it's J.
Probably
so Jumbo. Yeah. So Jumbo Interactive. So let me just have a look at that. So this stock hasn't done much for quite a while. Terrific trend. It's actually a stock I had a lot of success with back in this previous period. It was a great trend following stock. It was a stock I owned myself for a while. It's one of the best trades I've had in the last decade. And you can see I've got some markings on here from previous times. That must be my entry point. Sold a portion of the position just below the highs, and then the rest of the position as it started to consolidate below the averages and break down. And then from there, and this is often the case with boom stocks. Boom stocks often go through lengthy periods where they don't do anything, or also they give back much of the gain from their previous bull run, which this one did. And now it's just been in this lengthy consolidation. Not great trends. It's all been choppy and messy. Looking at it now, there's nothing here that really draws me in. We have declining moving averages. The prices just started to get back towards the averages, but it's too early for me to get interested in this stock. I'd probably just keep this one on the sidelines. Like I'm trying to. Like if somebody wanted to play it, like it could be bought at current levels with a stop below the recent low. But I think the risk with this one is that we just get more of the same. There's been several years of just sideways chop. There's nothing here at the moment suggesting there's a big base in place. It's starting to break higher. So I'd rather go with more momentum, and I just don't have the momentum in Jumbo to get involved. Even though it was a previous top line stock for me, I don't have loyalty to stocks where I go, oh, it was such a good stock, I want to get back into it. It's like that story's past, and it's now everything on its merits. And on its merits, the price action is not there to suggest I want to come back and have another go.
Yeah, as you say, there must be a few stocks like that where they get that initial sentiment boost. One that comes to mind is DroneShield, and hopefully, it's one of those. A lot of these stocks are doing similar things where everyone's just putting all their money, and then they realize there's not much there, and then it just goes sideways for a while, right? So, all right.
DroneShield is a classic as well, right? When you look at that, so it's another stock I've had a lot of success in as well. This terrific boom trend, but then look, when the bust comes, it can be significant, and then people see the bust and they see the initial recovery, and then I think there's a lot of buying on the basis that people are looking for a quick recovery back to the former glory, and that often doesn't come. Stocks, when they start to unwind and unravel, that process can go on for some time. So after that initial rebound, drone's gone back into a downtrend, and it's now heading back towards levels where it first gave a buy signal. First buy signal was back around December last year, and it's making its way back there. And there's been many more stocks which have followed this same process over time. This is why I think an exit strategy is just so important. I think the risk I think so many people, I hear from a lot of people who will ride a boom, and they're really good at staying on for the boom, and they don't get shaken off along the way. But that same tendency they have, that same quality which has kept them in and not been shaken out along the way, also keeps them in when the shakeout becomes a rout, and they keep holding, and then emotional things happen, and they don't want to sell at lower prices, and all lo and behold, you can find yourself all the way back down here. I've seen it happen so many times before. So it's a case of we want to let a profit run for as long as we can, and not get shaken out by periodic pullbacks, but then have a strategy of differentiating between, okay, what's the pullback and what's a terminal decline in the trend, and you never know for sure. But that's why I use wide trailing stops to give us a chance of seeing off these pullbacks. But it gets to a point where you say, okay, enough's enough. I've given back enough now. I'm going to, it's been a great trade. Take a bow, leave the stage, go along and have a look at some other stuff, rather than just holding all the way down, which unfortunately a lot of people do. They do well by staying on, but they don't have the exit strategy, as opposed to other people who just take short profits all the way and never get the big trend because they can never stay on. So there's two big issues people have with selling. They sell too soon, or they sell too late, or don't sell at all. And so we've got to. That's why I think a rules-based approach is so important, because it can help manage these situations and address these problems that a lot of people face.
Exactly, and this is why we teach these things, hopefully for people that don't 100% use a trading sort of system, right? Because a lot of that initial boom is probably due to people listening to their mates and all this sort of stuff, right? And they get on, and then they forget about, as you say, selling when potentially needed, right? And it just ends up sitting there as dead weight on your portfolio, really. So not a pretty picture, that DroneShield for now, but let's see what happens. Let's have a look.
Just one quick thing, not wanting to dwell on this for too long, but it'd be interesting. So it's now down 78% from its high. So I wonder how many people bought DroneShield on the last euphoric sort of run up. So this is where the FOMO type of price action comes in. Wonder how many people bought it up around these highs and still have it in their portfolio with it down nearly 80%. I'd be willing to bet there'd be quite a few. Like, we don't know, never know for sure, but there'll be plenty of people who would have just seen the charge higher. It's making the headlines. It's in the news feeds. It's in the chat sites. They go, look, this stocks could go anywhere. I'll buy, and then it collapses, and they don't sell. Now, I bet there's people with DroneShield in their portfolios down 80%, whereas there are others with DroneShield in their spreadsheet as recording a 400% profit, and they now got their money somewhere else. So which trader do you want to be? And of course, I want to be the latter. Everyone wants to be the latter, but it's a process. It's a rules-based process. It can be done, but not everyone wants to do the work to find the process, and they follow tips and whatnot. And this is the peril of not having a strategy.
All right, beautiful. Let's get on to OCL then.
Well, so let's just see where it's come from. So so a big run during 2020, 21. Period where we had declining moving averages staying away. And this is a motion trader stock, and I've got some of this myself. So it does have that general rounding shape to it. You can see like the lower lows give way to rising lows. So that's a sign that there's a momentum shift underway. Then we have a break above a previous high point. That came in around September. That's probably close to the motion trader buy signal as well. Around there, I think I'm in this stock a little bit later. Maybe, I can't remember exactly. Maybe I'm in late September, early October somewhere. It's had a good initial run. Now it's come back to the moving averages. Well, the underlying structure here at this point remains bullish. At the moment, this is a potential emerging, or this is what could be an emerging trend, and it's having a pullback. Nothing unusual there. And like you can see, it did something similar in this space. Look, had that initial run, pull back to the moving averages and rallied again. You see this happen so many times within bullish trends. It's called like any chart. You see this sort of price action evolve. For myself, I'm holding this stock. I'm not looking at it with any extra interest. It's just one of the stocks in my portfolio. It's in profit at the moment. I've got a wide trailing stop, which will be below the 100-day moving average. I'm happy to risk a modest profit. I'm happy to risk giving back an entire modest profit and even have a modest profit turn into a small loss for the purpose of potentially staying on what could develop into a much larger trend. Like, could this become a stock like Jumbo Interactive became in 2001, where it starts to move higher and has pullbacks, and then it continues to go on and on and on. We don't know. We never know in advance which stocks are going to deliver the 100, 200, 500% gains. They start with similar characteristics of emerging trends, and we've just got to hold on and see which ones go. So we're looking for the outliers, but we'll only know later on when we look back in hindsight which ones they are. So we've got to give every stock the potential to be an outlier. And that means risking giving back modest profits for the sake of trying to stay on what can develop into larger trends. So at this point, I'm happy holding this one. Probably not in a hurry to buy it at the moment. I don't really want to buy a sharp pullback, even though it's back to the moving averages. I'd rather see it start to stabilize around the averages and then start to rally off them. Maybe that could be the buy the dip. So I'm not in a hurry to buy it, but I'm happy to hold it and see whether it can stabilize. If it doesn't stabilize and it breaks down, hits my stop, that's okay too. I've got a strategy for that. Get out, remove the capital, put it somewhere else. But at the moment, yeah, there's potential here. This could well and truly stabilise and then continue higher, be above the November 21 high in the first half of next year. It's got that potential, but we'll only know how it plays out when we look back.
All right, XRF. Uptrend, clear and simple. Rising moving averages, price above the averages. If I had this, I'd be very happy holding it. I'd have my wide trailing stop back below the 100-day moving average and see where it goes. There's probably also a case to buy it now with a stop at least below the 50-day moving average, maybe below the 100. All-time highs have a tendency to lead to more all-time highs. I think a very simple strategy can be buying a stock as it's an all-time high. And I think if you test that strategy out, you'll probably do quite well over time. At some point, an all-time high will be the high, but as we spoke about earlier, but more often than not, all-time highs lead to more all-time highs. And there's nothing here saying this sequence is currently finished. Okay, fantastic. All right. Kirby, hello. PPE.
So this stock, look at this. It's highs back in June 21. Again, another good example of why we want to have exit strategies. There's no need to have held this one all the way down for the last few years. Any half decent trailing stock is going to get you out of this a long time ago. And then it's a case of sit back and just not even watch it, just put it to the side until you get an alert that it's back above its moving averages. And that actually happened a week ago. This was a motion trader signal. So you can see the sequence of lower lows has given way, and we're starting to build a sequence of rising lows. It's very early on, and this could be an emerging trend, which now sort of like we've gone from below the averages to above. One scenario is we get some sideways chop back towards the averages as they continue to turn higher, and then we get another run, and a trend develops from that. So I think this is certainly a stock with potential. I think risk is manageable with this from current levels. Stock could be just below the moving averages, and it's asymmetric. in terms of like you go, look, where's my upside potential? And the upside potential really does appear to be quite open, and you can manage the risk, and you can say, look, I think my upside potential is a multiple of the possible risk which I'm taking. So for me, that's got to make into the trade. If I bought this a week or two ago, I'd be happy holding it. It's probably a reasonable point to buy it at current levels with that trailing stop. But if buying at current levels, don't be surprised if it does chop sideways for a few weeks, just correcting that or consolidating that initial rally. But it's this is one which will be worth watching to see whether it turns into one of those trends which does keep extending upwards.
Yeah, that's good. All right, let's have a look at Steve's BTR. Sorry.
So don't know this one, and this is why I don't know, because it's only a 2-center. So I tend not to see too many of these because I'm not really looking at the 2-cent into the market just because there's too much volatility. They can go from 2 cents to 4 cents back to 2 cents, and there's a lot of chop and churn. That said, it's got again, you can see the lower lows give way to rising lows. So it's got that basic structure of a market that is where the trend is shifting from down to possibly up. So it's got the makings of an upward trend. So we've got rising lows, rising highs. The moving averages are generally making their way higher. Prices pull back to the averages. There's possibly going to be some support coming in right around that 2 cents sort of mark. Like how would you play this? It really depends. Like I probably wouldn't play this because it's just a type of stock. But if someone particularly likes Brightstar Resources for whatever reason, maybe they're already in it. If they're already in it and they've been holding it since down near the lows, I'd certainly continue holding it and see whether it can stabilize after this pullback. Maybe this is just another pullback to the moving averages, as we've seen multiple times in the last few months. If it can stabilize around current levels, start to push higher again, maybe that's an entry opportunity. But I probably wouldn't rush to buy it at the moment. It's got some potential there. It's got the makings of a trend. These small stocks, I know they can rapidly double. I think that's the appeal for a lot of people. But you also got to think about your risk as well. Like it's also like if you were to buy something at current levels, put a stop just below the recent low, well, that's probably not too bad. It's about 30%, which is probably good for a stock of this sort of potential volatility. Look, it's got the makings of a trend, but it's not my favourite type of stock.
All right, let's have a look at MLX.
Yeah, well, there's a few points with this one. So, firstly, we've got this nice rally, and now we've got this sideways consolidation, and the consolidation is very much a range. Now, this range could very well lead to a breakout and another trending phase. My bias on this would be that it's an uptrend. It's a sideways consolidation, and I think I may have some of this stock myself. And if I do, I'm happy to give it the benefit of the doubt. My trailing stop will probably be just below the range. There is a point of vulnerability though, because you can see the moving averages have turned down and prices consolidating below the averages. So it's not a stock I'd want to buy at this point in time. it could be like within a range. When a stock's in a range, it's just going to oscillate either side of the averages, as we've seen it already do. It's going to go either side. So that might be just the swinging back and forth across the averages, and we're back on the good side of the averages within a relatively short space of time. But I still don't want to really buy a stock below the averages. If I had this, I'm happy holding it. Stop loss below the range. If I'm going to buy it, I want to see the price start to move back above the moving averages, start to hold above it, moving averages start to turn higher, and then we're looking for a breakout. This is probably like a stock I'd like to buy on a breakout basis, not on a dip basis. Now this range has stretched on for so long. But yep, certainly a stock which we could see move higher into next year.
All right, MXR.
Well, it's a bit like the Brightstar we were recently talking about, in that it's been a stock not to look at for a while with below the moving averages. But now we do have some sort of signs that maybe there's some sort of turnaround underway. It looks like it's a fairly liquid stock. You can just tell by the patchiness in the price action. You probably go to the bid and offer and probably not find there's probably not a great deal going on. There's a possibility this is a turning sort of phase. It does look like we're getting rising lows. It's not a stock that I want to really play with. We've got these rising moving averages, prices above the averages. Maybe it could be maybe a breakout could be bought just above the October high. Or if it goes sideways a little bit more, maybe it pulls back towards the November low, and then from there maybe it can rally again. We get a breakout. That could be one way to play it. Stop loss can just be back below the 100-day moving average. But a lot of these stocks they're prone to these movements where they do get a bit of excitement and then they quickly come back. A lot of these moves don't turn into lasting trends. So just got to be careful with them. They're patchier and they're harder to get than stocks with probably a larger market cap with more volume, more people looking at it.
Okay, great. Hey Charlie, let's have a look at yours. We've got VLS.
Yeah, so this is turned down. So I had some of this. It was a motion trader stock. It hit its stop loss a week or so ago, and you can see we were talking about topping patterns earlier with the ASX 200, and this is an example. So look, there's the high back in March, and so this topping process took 6 or so months just to work its way through. Price came back to the average, worked along the averages, then started to dip beneath the averages. The averages started to turn. We get the consolidation below the averages. That's where the vulnerability comes in. So if this were the ASX 200, this is where I'd be saying, well, this is a vulnerable point, maybe reduce exposure, pull back risk, less active with buying, because a vulnerable structure can give way to the downside. And that's what happens. This is just price action. It's not specific to a stock or an index. It's just price action. It's looking how that structure does change and how the buyers become less willing to support the stock on pullbacks and the sellers become more aggressive, and you can see how the price gives way. So it's not a stock I'd want to be in with the price giving way. That's where the trailing stop comes in. So it's just saying, look, it's price is giving way. It's too far from my from its most recent high point or from my entry point. It's time for me just to say, look, I don't know where this is going to go. I'll walk away. Maybe it stabilizes before too long and I didn't need to get out, but it's a what if, which I always come back to. What if it doesn't stabilize? what if it does like some of those stocks we were looking at previously, like DroneShield or JIN, where they just keep giving way, and then you're down 50%, you're down 80%, and so on. So that's why you always have that exit level. It remains vulnerable because these moving averages are declining and the price is declining. I don't know where this goes from here, but the path of least resistance at this point is down, so I've got to protect capital, and it's not a stock I'd be willing to continue holding in my portfolio.
All right, we've got SOL, SOL. Oh, well, should know this one. Everyone should know this company.
So this is an ETF, effectively. It's a funds management business. They hold a whole lot of other. I think they've got large holdings in relatively few stocks, but I haven't looked at it for years. You have to go and check all that out for yourself. At the moment, would say there's I'd say there's it's a pause within an upward trend, and we can draw in some, and so price looks to be compressing as well. So we can say we've got overhead resistance that comes in at around 35.90, and then this is the compressing part through here. It's not like, this isn't a great lower line. It's only like by 2 points, and you could have previously have done that, and that didn't work. Now it's doing that, but just gives you can just see, it's just for the point of illustration that it's there's a general narrowing in the price action, and it's the lows are generally, these two lows aren't rising, but generally from this low point from May, the lows are higher. I think it's gearing up for a break to the upside. That's the bias I'd have with this stock. If I had it, I'd be happy holding it. At this point, I'm not looking at this as a topping process. The topping process would need the price then to break down, start consolidating beneath the averages, and the averages to start rolling. At the moment, we're the opposite way. It's consolidating above the averages. I think it's getting ready to punch higher. If I was thinking of buying it, I'd probably wait for the breakout. I wouldn't preempt the break, because maybe it doesn't break higher. Maybe it does turn. So if I was buying, I'd buy the breakout. If I was in from lower levels somewhere, I'm happy holding wide trailing stop, and see where this one goes.
Beautiful. I was told in another webinar at some point that the Washington H-Sol Pattinson was the oldest listed company on the ASX.
Yes, I've heard that myself. So that would be, I think that would be right.
All right, let's have a look at MME, please. Thanks, Thomas.
But it's evolved over time. I don't think it would have begun its life as an ETF, effectively. So it was something, and then it became something. So it's probably got this long history for all those interested in the history of companies. So sorry, what was that stock, Rog?
MME.
Yeah, well, that's a bust, isn't it? From $2.44 down to less than, down to 5 cents or something. It's a bit of a theme today. Avoidable calamities. It's there's no reason that anyone holding this at its highs should still be holding it now. But I bet you there's more than a couple of people who are still holding it. Exit strategies. It's just so important. They don't work. They don't. Sometimes you look at them and go, "Oh, shouldn't have listened to the exit strategy. I just should have held because it tapped my exit and rallied again." But they're not the ones that cause the problems. It's the ones like MoneyMe that cause the problems. They just keep falling, and they absolutely destroy capital. Exit strategy is so important. Now looking at this one now. Well, we've got a nice clear trend change from below the averages to above. Averages have crossed. That classic consolidation back into the averages. We talk about this pattern, this structure so often, where it goes from below to above the averages, gets a bit carried away in the near term, pulls away from the averages, and when when a stock gets a bit stretched above the averages, gravity always catches up at some point and pulls it back in. We get this classic sideways into the averages and another rally. It looks like it's just broken out again recently. It's also doing so against a backdrop of a pulling back ASX 200. So it's got relatively strong price action. If I was in this one, I'd be very much happy holding it. It's probably one like could it be considered as a buy at current levels? And you go, well, it's probably, if you're happy with, say, 25% back below the 100-day moving average, which would also be back below these two highs, which was the recent breakout point. Yeah. And it's still asymmetric. It's an asymmetric possibility, an asymmetric opportunity, say a 25% stop loss, and it's one of those stocks with the potential to double and double again. Doesn't mean it will, but it's the potential. We want to put ourselves into situations where our potential loss is relatively small, but our upside is a multiple of that loss. And you can be wrong 60% of the time, and you only need to get a fraction of those 40% you're right on to double and double again. And if you're managing your risk on the downside, you're not losing too much when you're wrong, but you're making a whole lot when you're right on a few stocks and doing okay on the rest. All of a sudden, there's a good chance you've got a market-beating portfolio. That's the strategy that's the sort of process that can get you there. And it's following stocks with this sort of structure. Whether this one delivers, we don't know. But yeah, look, I'd be happy to see whether this is one of those ones that could run. It could. Certainly has the makings of a trend. Let's see whether this is one of the ones that extends.
All right, great. G'day, Bob. Hey, Talwin, let's have a look at yours. SRG, please, starting at SRG.
Trend's still in place, pull back to the averages. If I had it, I'd be happy holding it. I'm probably not in a hurry to buy it, just with the market pulling back at the moment. And it feels like if this is just going to be a temporary pause, maybe there's a bit more work to be done yet. Looks like it could be all-time highs, which in itself is not a problem. Yeah, one which I'd be happy to hold. Trailing stock would be below the 100-day moving average. So I'm always willing to give back. I'm always willing to give back profit for the potential of staying on a trend. And the mistake so many people make is that they jack up their stop loss to maybe 10% below the share price. And so look, just looking at that. Yeah, so someone will be using a 10% stop loss. So look, it comes back 10%, I'm out. Well, you probably wouldn't even be in this one because you would have been stopped out so many times in the past. So I think if we want to ride outliers, got to give them lots of room to move around, and that's what I'd be doing with this one. Be giving it that room. I'd be staying on the trend.
Beautiful. SKS.
So I've got some of this one, well, I'm holding. I'm continuing to hold. It's come a long way. It's come from down at 14 cents to where is it now? $1.96. So it's up like tenfold more than tenfold in a year. I haven't been in that long. I can't remember exactly where I got in. It's one of my better stocks, but it's look, I'm just guessing. I'm in from lower levels, but it's still up. It's still a triple-digit win. It's been a motion trader stock for a long time as well. So hopefully there's some motion trader members who are up several 100% in this stock. There's no sign of this trend ending at the moment. When I say that, it doesn't mean that the recent high is not the high. That could be the high, and the topping process could be underway. But at the moment, there's nothing there to suggest that that's the case, because we've still got rising moving averages. Price is still above the averages. So the only thing I can do in this situation is give that trend the benefit of the doubt. I think trying to pick tops in markets is it's a game that leaves so much money on the table, because so often we we get pessimistic about a stock's prospects way too early, and big trends can just keep running. So I think we want to be, when a stock's trending, be optimistic that it can go a lot further, and when it's breaking down and it's hitting your stop loss, be pessimistic and go, look, this could get a whole lot worse. So many people approach it from the opposite direction. They get into a stock that starts to rise, and they get pessimistic, going, oh, it's gone too far, it's got to stop, I'm going to take profit, and they sell, and they sell way too early, or they get into a situation where they, those examples we looked at earlier, like DroneShield and JIN, when they turn, they become optimistic that the low must be soon, and next thing you know, they're down 80%. So optimistic when it's rising, pessimistic when it's falling, but give it plenty of room to move. This trend remains in place. My stop's back below the 100-day moving average. We'll see what happens. I'm probably not rushing to buy it at this point, because tenfold plus in a year is a lot. But I'm happy to see where it can go with my existing holding.
All right, GNP.
Nice consolidation around the moving averages. It's almost a bit of a, you could say it's almost a bit of a range which has formed. It's been this nice trending market. I've actually got some of this myself. No plans to sell it for me at this point. Trailing stop is comfortably below the 100-day moving average. I'm happy to see where this goes. This would be one where I think we could consider buying the dip, because it has been it's been consolidating for several months. It feels a bit like this previous consolidation where it just moves sideways towards the moving average. Yeah, that can be a dip to buy. It's like, I don't want to buy the dip when the market's declining. I'd like to buy the dip when it's just traveling sideways along the moving averages, because from a risk perspective, I can say, look, from where it currently is, I could have a stop. Maybe I could give maybe 9%, less than 10%. And if it picks up momentum in the near term, that's great. If it does stall here and start to roll over, I can get out for a relatively small loss, not much damage done, and just go away, do something else. Like, you could keep extending the initial stop loss. Like, we've got a low point from October, it could be set below there, but then you just keep drawing it out, and then you can find another reason to make the stop loss even further away, and then your risk starts becoming larger and it becomes less asymmetric. If I was buying this dip, I'd like to use a nice close stop on this one, and otherwise maybe it's a case of buying the breakout. Breaks above these recent highs, starts getting some momentum up towards maybe the high 260s, 270. Maybe it's jumping on then with a stop below the recent lows. But yeah, it's certainly a stock I'm happy holding.
All right, NXL, please.
It's come a long way, this stock. Again, a motion trader stock. It's been a motion trader stock for a while, so there's a really nice gain there. Sharp pullback to the averages. It has stabilized. Yeah, this is not the sort of dip I'd want to buy. I'd like to just watch this one. If I was holding it, I'd keep holding it, and I have my stop loss. My stop loss would be below the November low, below the 100-day moving average. This is one which could, I think, it looks like there's more consolidation to come. So whether the consolidation forms out a platform which the market can then rally off, that's one possibility. But there's also the chance that it has peaked, and this is part of the rollover phase where it does start to give way. I don't know which way it goes, so that's why I say I'd give it the benefit of the doubt with a wide trailing stop. If it triggers a stop, so be it. I'll hopefully I'm in at good levels. Maybe I bought an earlier breakout, and I'd just be locking in probably a pretty good profit. But I'd also give it that chance to stabilize and maybe go higher. But I'd just hold off buying for now. I want to see a little bit more about how this structure develops.
All right, fantastic. Let's have a look at JJJs, and that is NIC. No, we're looking at NIC. Sorry, just the user is JJJ.
Been watching this one for a while because I've been watching the nickel price, but the nickel price just can't lift itself off the floor. It just keeps, every time it looks like maybe it's starting to try and base, it has another leg lower. Yeah, we do have like a rising low, but it's kind of, for me, it's kind of a little bit somewhat range bound. So you can see it's contracting. You know, I'm not going to join up. I'm not going to link up the lows because they don't really link up very well. But just to illustrate, you can sort of see that it is coiling somewhat. So it's one I do keep a bit of an eye on, but not one which I'm ready to buy at the moment. I'd like to buy a break above. I'd like to buy it into some solid momentum. So it's really looking about the start as a break above the October high. I might want this stock up above $1.10 to sort of see some momentum coming into it. Could this be like a bit of a rounding structure developing? It could be. There's a whole lot of stuff. There's stuff going on which suggests it could be a basing process. It could be a turning process, but it could still also just continue just to chop for many more months. So I don't know that this one's ready to go yet, but it's worth keeping an eye on.
All right. Let's have a look at.
And the same goes for when we look at stocks like South32, S32, BHP, Linus, all these mining orientated stocks. That looks like there could be some really nice plays in them, but they, I think a number of them just aren't looking quite ready to go. Nickel Industries is another one of them.
Okay. Let's have a look at our favorite stock of the year, please, from Yuki Jason, and it's APX.
There we go. I've already got the code in there.
Yeah, you're in your.
It's encouraging price action because we're getting this sideways consolidation near the moving averages. If I was in this, I'm very happy to stay in it. Now, what do we do if we're not in it? Do we buy it at this point? I just wonder whether the consolidation is going to take longer because this is such a big rally from 45 up to $3. I do wonder, like maybe it could be bought at current levels, but you're looking at like probably a 25% stop loss, which is reasonable given that it's got the potential to. Could it double? Yes, it could double. So 25% seems okay. I just wonder whether there's just more consolidation to come. Maybe it's going to take a little bit more time to work off this strong rally. I'd be happy holding it, but if I wasn't in it, I'd probably be happy watching it. And if this consolidation builds out to a point where we can say, look, this seems like a good buy the dip point, that's great. If not, maybe buy a breakout to the upside. But yeah, looking at this point, looking good.
Okay, let's have a look at. Right, we've got a couple of general questions. I'll leave it to the end. Thanks, Martin. Bryce, let's have a look at CSL.
This has been range bound for ages. Yeah, look at this. It's been range bound since, really since just after the pre-COVID high. There's the COVID low, and it's been a no man's land. It's done nothing. It's done nothing for 4 years. Now that's not to say it's going to do nothing forevermore. Plenty of stocks that get stuck in these ranges, people just stop watching them, stop thinking about them, and then you can get some terrific trends. But at the moment, it's not a place it's not a place for my money, at least anyway. It's and it doesn't even pay doesn't pay much, from memory, it doesn't pay a large dividend, so you're not really being paid much to hold on to it. Below the moving average at the moment, so we have no near-term momentum. So it's also smack in the middle of the range. I'd just leave this one alone. It's going to get me interested. It's probably really going to take a break above this big resistance around 300 and 320-ish. It's not for me for now, but at some point, I'm sure we're going to get a break in this range, and there'll be a big trending phase. It's just not happening at the moment.
Last dividend paid from CSL was $2.17. So yeah, you're probably right there.
That's not very much for a $320 stock.
All right, RMD.
Yeah. So this is, or maybe was, a motion trader stock.
No, sorry, it's RM. M for Mary. Sorry. I mean, that might have been good, but yeah, M. ResMed. Yeah.
Yeah. Trends in place. Got this consolidation along the moving averages. A little bit like some of the other stocks we've spoken about, where market rallies, trade sideways into the moving averages, and then rallies again. My bias would be that this trend continues. This is one where if somebody was thinking of buying the dip, now it's probably a reasonable place. Stop loss could be just maybe about 8% away, and see if this trend continues to move higher. If I'm in this stock, I'm happy holding it. And as we've been talking about all day, it's just like we don't know how far the trend can go, but it could go a whole lot further. So for that possibility, I'm happy to stay in it, give it room to move around, and see what it does. And at this point, rising moving averages, price above the averages, trend is in place with that current consolidation, or alternatively potentially buying the breakout just above these recent highs. We can just link all that up, say like a break to 39 thereabouts, as would say, well, look, the trend is now continuing higher.
Okay, Rodney, EML, please.
Yeah, it's been a patchy company, this one. It's given a few signals which haven't played out for motion trader, like these initial, and this is the thing. Like, not all momentum leads to great trends. Momentum can be fleeting. It can come in, and then it can collapse. So this is why I think I always talk about spreading risk. Many relatively small trades. So when you get stocks that don't deliver, like EML, well, we can just close them, take small losses, move on. And when you get one which run, you let it run. At this point, it's like I'm not ready to follow this as a buy signal just yet. It's gone from below the averages to above, starting to pull back. Moving averages are turning higher, so it's starting to give the signs that it's a buy. I'd probably say, look, maybe I'd just watch the price action for now, see if it can just maybe travel sideways as the moving averages catch up, and if it can trade sideways into the moving averages, well, then it's possibly a buy the dip, or it's a buy the breakout. At the moment, given it was a bit stretched above the averages, I don't think it's had enough time. If it were to shoot higher again now, it would still be stretched above the moving averages, and I think susceptible to a pullback. So if I wasn't in this one, I'd hold off buying and just watch the price action a little bit longer. If I was fortunate enough to have bought the low or near the low, well, great. I'd be happy holding it. Have a stop loss back just below my entry maybe. But it's not a trade I would have made because it was coming from below declining moving averages. But some people will do that. Let's keep an eye on this one, but not quite ready for me just yet. It could develop that one, but just give it a little bit longer.
All right, Bob asked for ORG. And finish off on Zip, I think.
Trends in place, pull back to the averages. Look, this is a stock I'm happy holding. It's the possibilities there for buying the dip with a stop loss a bit below the 100-day moving average is probably a relatively small stop to place and trends in place. So this one is one which I'm happy to hold in the portfolio. Trend continues upwards.
All right. Zip, Andrew just asked, are we exiting Zip now?
Well, no, we've talked about this sort of play quite a bit today already. It's uptrend is in place. It's pulled back to the moving averages. So a topping formation takes more time. So what makes the current price action different from this price action? What makes it different to something like we saw back in April, like a market extended above the averages, came back to the 50-day. So every situation is going to be different. It's going to look different, but it's not unusual for stocks in uptrends to come back to the averages. So that's what Zip's done at the moment. It's come back to the averages. Now, does it develop a topping structure over the next several weeks or months? Maybe, maybe not. We don't know. So at this point, if I had Zip in my portfolio, I'd be very happy to continue holding it. I'd have my wide trailing stop. I'd be risking giving back more gain for the possibility of staying on what could become a much larger trend. We'll know in hindsight what was the right call. But for me, the right call is following a rules-based approach. And that's whether I win, lose, or draw. It's doing the right thing is the most important part of my strategy. And the right thing for me is to give winning trades plenty of room to move and try and stay on big trends for as long as possible, or try and stay on trends for as long as possible for them to develop into really big trends. And now I could lose money on a trade with that approach, and that's okay. It may be a negative result for that individual trade, but it's still the right approach for getting the overall outcomes over time of following trends, giving them room to move, doing what's right, and not getting scared off in every pullback, because we're going to have lots of pullbacks to 50 and 100-day moving averages within large trends. So let's just see with Zip whether it can hold the line somewhere around here and rally again, or whether it builds a topping structure. But at this stage, for me, it would be a hold.
Beautiful. All right, a couple of general questions here. Got one from Martin. Any thoughts on the practice of holding ETFs long term? Isn't there value attrition because of how the daily values are calculated?
I think holding an ETF longer term is a completely fine approach. Lots of people will hold an ASX 200 ETF or a SP 500 ETF, or any number of ETFs in their super funds or in their own accounts, and just say, look, this is my longer term exposure to the market. Not everyone should be trading individual shares, because their individual shares are hard, they're volatile. There's the market itself there's volatility entwined in that, but individual shares I think accentuate that. So I think for a lot of people, ETFs are the play, and longer term is also the play, because emotionally they're not cut out for trying to trade the ups and the downs, and they end up getting excited at the highs and buying, and they get emotional at the lows and they sell, and they'd be better off just buying and putting in the drawer for 30 years and coming back. But that's not everyone. Other people are more emotionally set up to be able to trade the individual stocks, and they're interested in the individual stocks, and they want to follow them. They want to know strategy. So it depends what you do. So yeah, I've got no problem with the longer term ETF. The second part of the question, I'm not sure about. I'm not sure about the value part of holding it, but there's going to be a cost to everything, and I think the overall benefit of holding an ETF long term outweighs any cost implications, because you've got to pay somewhere, and if there's any value erosion through an ETF structure, well, it depends on the individual circumstance, but in general, I'm positive towards longer term ETFs for a lot of people.
All right, very good. Last question here is from Talwin. When is it generally too late to start a new position when a trend has been established?
Talwin, we just never know. It's like an upward trend can have many entry points. It's a lot of people will say, look, say a stock starts at $1 and it gets to $1.50. A lot of people say, oh, look, it's up 50%. It's too late to buy. But that $1.50 could turn into $10.50. It's like an upward trend. We just do not know how far they'll go. And some of the biggest trends offer many entry points. I don't really like buying stocks when they they start getting stretched above the moving averages. Then at that point, I'll be inclined to say, look, if I'm not in, I'd probably rather wait for the next pullback to the averages to look for a potential entry point. But if a stock's on a great trend, say it's up 200%, I don't want to say, well, look, this stock's up 200% in the last 2 years. It's too late to buy it, because over the next 2 years, it might double or triple again. We've seen that happen before. So I keep an open mind, and if I can manage the risk effectively and I'm comfortable with the risk and it looks like the right setup to buy, the fact that it's already up a lot, it's so be it. Let's see whether it can go up a lot more. That's probably the way I'd approach it. So be optimistic that a trend can extend, and that's how we need to play it. If we're always trying to buy things within a few percentage points of the low, I think we miss out on too many opportunities. So I think be open to paying more for stocks within upward trends, as long as the risk parameters around that all stack up.
Beautiful. I think that was answered perfectly, Jace. I think that's it for this show for today. It's been a good one. Thanks for everyone for coming in with their tickers. It's been a great year, Jace. So thank you very much for all your help this year. I'm sure I'm talking on behalf of all the people online watching, and the ones that have been, the ones that are not here today as well. Thanks, mate.
That's been fun. I've enjoyed it. It's been a good year, Rog. Thank you. Thanks for hosting and putting the shows on for me to come and talk to you, and for our viewers to come and watch. And I'm looking forward to coming back in 2025. Have another crack at it. Plenty more stocks. There's always plenty of stocks to talk about, and the viewers come up with some really interesting ones I've never heard of before. And so yeah, let's keep that running.
Exactly. And it's great to be able to have both. Not just the great ones, but also the ones that don't look so good, to be able to analyze. I want to wish everyone a very happy holiday season, Merry Christmas, and a Happy New Year. And we will, obviously, I should always mention once again, like, subscribe, follow, get over to Jason's service if you're a bit bored and you haven't done it yet. Motion Trader. Get onto his trial, and then you can learn a lot from his education over there. If you're not a Selfwealth member, you can obviously join us anytime. There's links down below. If you want more education, go and have a look. Go and review some of our old shows. The first initial 12 shows were great, and I've had quite a few people already ask me for a playlist, and all I've done is just got the list of the original 12 shows, and I just email them. So if you want them, they're there as an email from me. I can always send it to me. Just send an email to support@selfwealth.com.au, and it will come to me. If you have any questions, you can do that as well. Otherwise, yeah, once again, have a great holiday season, everyone, and I wish you all the best. Take care, Jace. Take care, everyone. Have a good one. Bye-bye.
Good one. Thank you.